Point Zero Forum, Zurich, 1st to the 3rd of July, 2024. Foreign exchange, digital money, and the future of FX. This discussion will support the work with the objective to promote understanding and share insights on the integration of digital currencies in the FX market, identify challenges, and explore opportunities presented by the intersection of FX, DeFi, and wholesale CBDCs. Encourage collaboration amongst stakeholders to shape a forward-looking FX framework that accommodates digital innovations. Sounds like gibberish. Probably is. Over to you.
So, in a different talk around the stable coin, we talked about what would actually make for an intrinsically stable, universally usable cryptocurrency, which is what we claim that we are actually building. And from that perspective, I think this foreign exchange discussion looks a little bit old school. Like we have these currencies that we actually see as currencies, the USD, the ruble, the whatever. And crypto is this non-currency thing that we might want to exploit somehow for foreign exchanges. But
well, that's
what
correct.
is the
ultimately? There is only one cryptocurrency, and it struggles to meet the definition of the term, which is Bitcoin.
Yes.
It struggles to meet the definition of the term because it's just simply not a usable instrument. So, yeah.
So we like to get back to first principles and talk about, so what does the space look like if there is actually a universally usable, intrinsically stable, and functional cryptocurrency. And part of our vision is, of course, that our architecture needs to be adaptable to existing regulations so that you can partition the ecosystem so that you have Gajumaru associate chains that, for example, operate under US regulation or under EU regulation, others that operate in areas where there is no useful regulation. And one way to think of the Gaju, for example, then as a currency is to view it as a foreign currency. So in small countries like Sweden, for example, it's all the invoicing systems, all the bookkeeping systems that are worth anything that people tend to use allow you to operate with euros, dollars, whatever. They're multi-currency because we have a small currency. It's not useful as it actually is in many cases in the US, for example, QuickBooks, whatever. Quicken, I remember from the 90s, only operated in dollars, which I thought sucked because it was a good software otherwise. But for me, it was unusable because it didn't actually support my currency.
There's a few things in this. And one of them certainly is that aspect of being a currency. People say, so how do you transact in Bitcoin? Because people are always going to try and reduce it to a reference currency for them. And I think one of the things that we're certainly going to be talking about with the Gaju and the Gajumaru over the years to come is examples like that you've just given, where actually less so in the developed world, but more in the emerging economies of the BRICS, for example, South America as a whole, the need for a currency that can actually be relied upon, that isn't the US dollar, isn't the euro, is growing. And talk of people who've been talking about having a BRICS single currency who've obviously never heard of the euro and the fiasco that has been. The answer actually is something like the Gajumaru and the Gaju itself, the currency. But as we've identified, there is only one true cryptocurrency, and it isn't really a currency. It's a proof of concept for a currency. So we are as we say, putting the currency back into crypto. And you're right in saying that we need to think of this in the context of an FX instrument that could be a base currency for a particular user, or could be a currency in which they're willing to transact because it has open liquid markets. I think with a lot of the discussions around stable coins, crypto, etc., it's missing some of that core point that what are you trusting?
Mm-hmm.
Very much so. Further, even just in the language of this, one of these talking points, identify challenges and explore opportunities presented by the intersection of FX, DeFi, and wholesale CBDCs. They didn't say CBDCs; they said wholesale CBDCs.
Yeah,
They're
so
already exposing
the
there may
rationale
be
for
a
that.
layer here.
Yeah, so what they're saying is that there's a rationale around that, which is that we won't actually have retail CBDCs, or if we do, they'll be very strictly controlled and very limited in offering. So in Europe, they were talking about having a CBDC that you can hold up to 2,000 euros worth of. Now, I think that's interesting. Yeah, but see, the thing of it is, if you think that, let's say, 300 million people decide to put 2,000 euros, take 2,000 euros out of their bank and put it into a CBDC, in other words, essentially a direct deposit with the central bank, you're actually going to massively undermine the entire financial system, because all of those deposits are going to come out of commercial banks and go to central banks. And this is one of the big reasons why they really don't want this to happen, because that would undermine the entire fractional banking system. And as I say that, I have to put into context my usual laughter at what is referred to as DeFi. The attempt to legitimize DeFi in this context of actual FX is even more laughable, because DeFi is simply staking. It's not what if I said to you decentralized finance, you might think that I meant something like the credit union approach, where local people lend to local people who want to borrow money, or indeed people lend to people anywhere else in the world. That would be a truly decentralized model. No, it means staking. And somehow or other, it managed to pay preposterous levels of interest for your ETH that is staked. And it's all completely legal, of course. But putting that set of jokes aside, the question really comes around this of why are you differentiating a CBDC or even a wholesale CBDC from a USD? Is a wholesale CBDC differentiated because it has a different value? And what is the driver of that different value? Is it, for example, that its application and utility, forgive me, its application utility is greatly diminished, and therefore it is less valuable than a dollar, in which case it brings you to the question of then why have it at all? What's the point of a currency that is a version of a currency that, however dysfunctional it is more functional than a CBDC?
All this represents is business friction, and business friction is bad for the economy as a whole because it's hard to plan around. That's all just bad.
So, to conclude, we think that the reason why there hasn't really been a cryptocurrency is because the requirement to solve that problem is pretty damn steep, one. And two, as we've been discussing lately, it requires you not to eat of the apple of Eden. In other words, that you cannot become the blockchain itself. Your business model cannot be being the blockchain. Otherwise, you end up just creating more fake money. So the Gaju can answer that call as a cryptocurrency, and it could provide a very interesting and very liquid currency pair against the US dollar, the euro, the Japanese yen, the Swiss franc, some of the really strong currencies that one way or another are likely to remain. And with that, gentlemen, thank you very much.